the lessons that I've learned from that is, and actually I've probably conveyed this to anybody starting a company, is immerse yourself in your customer's business. Don't immerse yourself in your own business.
That's our guest for this week, Andy Yeoman, co-founder and CEO of Concirrus. Hello, Matthew Grant here, partner at Instech London and host of this, our weekly podcast. Concirrus is one of the most well-known companies in London to have emerged in the last few years, providing analytics for insurers. And as we'll hear shortly, they got a recent boost with another round of funding. But they are also building up a strong client base. Andy talks about what the company is up to, but once again, there's a lot to learn for anyone wondering just how people manage to build a company and get on with the rest of their life. Now, if you're listening to this in March 2020, then you may still have a chance to see Chris Gill of Concirrus on stage with us at our next evening event in London. But do book soon, as we've only space for 250 people and our events are selling out fast. Also, a quick plug for our weekly newsletter. This is our roundup of what we see happening around the world, of what we think is important and relevant for you to know, whichever part of the insurance and technology world you come from. It's freshly made each week from only the finest ingredients. Sign up at www.instech.london. Anyway, enough about us. Let's hear what Andy Yeoman is up to at Concirrus. Andy, it's great to be here. We've known each other for a few years, so I'm really pleased to have a chance to sit down to you and learn about what's been happening at Concirrus recently, and also about some of your own experience in building a company. So you've had a career working for technology companies. A lot of them have got a theme around connectivity and data. You worked at Trimble. We were building and acquiring businesses in transportation, oil and gas, and insurance markets, so a bit of background there. And then you founded Concirrus in 2012 with Craig Hollingworth. Now, according to Crunchbase, you've raised $34 million, and most recently you had the news of your Series B round this month. But you're not just raising money, you've been in the news quite a lot recently for signing up some significant new clients, and we'll talk a bit about that in a minute. So thanks for carving out some time. And I also know you had your event last night talking about some of the things you're doing on commercial fleets. So how did that go?
Last night was an interesting event. So last night was one of our first big forays into our fleet product, into our automotive fleet product. And we held an event at the Transport Museum over in Covent Garden, which I think I was more excited about than anyone else. We had 150 people from across the fleet and transportation markets there, including some of the biggest brokers and TPAs and some of the very big fleets in the market, looking at the product that we've launched for automotive, which we believe will be as transformational as that from marine. So it's an exciting time for the business as a whole.
Good. Well, we look forward to hearing more about that. And actually, we've got one of your team talking at our event on March the 30th, specifically about what you're doing in that area. And TPA, just for people that aren't familiar with that abbreviation, third-party administrators, people looking after claims handling and things like that. Excellent. So, Andy, you spent 22 years, I guess, working for other people. So what was it that took you out of the sort of safe world of employment into starting up your own company?
It's a good question, actually. It's a little bit of a sad story, but it has a happy ending. It's certainly close to where we are. So back in 2011, I was working for Trimble, and I had a job that people would really like. Actually, I quite enjoyed my job. I was a sort of corporate troubleshooter, going around acquiring businesses and trying to turn businesses around, and enjoying the glamour of international travel that we've all experienced. But sadly, one Sunday morning, I got a call to say that one of my colleagues, who also did a similar job to me, travelled 40 weeks a year, he unfortunately passed away on the plane. It made me sit up and realise that I had 3 kids, and I wouldn't want that to be my story. So I did what you've got to see on the movies. I walked into my chief executive and said, right, I'm quitting. I don't know what I'm going to do, but I know that I don't want that to be my story. So what I then had to figure out was, well, what exactly am I going to do? And that's where Craig and I came together. And we figured out that there was an opportunity in what was then called the Internet of Things to create a company into that space. So we figured that we'd create a lifestyle company. And if you fast forward, in fact, to the fundraising, what I've discovered over the last few years is that having a lifestyle company and raising money, those two things aren't actually compatible. So I think one of the questions you're going to may ask is any lessons for people out there. I think my biggest lesson is lifestyle company or venture-backed company. You can't have both.
Yeah, I guess that is a challenge a lot of people have. They start off founding a company because they've got a real passion for doing something, and at some point realize that, as you say, if you choose it as a lifestyle, you get a very different outcome than if you're actually trying to raise some money and actually make some serious growth. But for people who don't actually understand what a lifestyle company is, how would you describe that?
Well, for me, a lifestyle company was basically something that gave me freedom, that I could come and go as I wish, spend more time with my family and kids, and not have the pressures of being in a large corporate with a large target of revenue above your head, as it were.
So with Concirrus, we talked a bit about what you're doing on the sort of motor side, but what are the problems you're solving with Concirrus today?
So our primary customers, as you know, are insurers, and I think what we address is an existential issue for them, which is in order for an insurance company to flourish, they need to have products, sell products which are relevant, and be able to sell those at a profit and make money out of it. And if you look into the marine market, the products are absolutely relevant, but I think the headline stats are that there's only been 2 years out of the last 15 years that they've been able to make money. And that's not a sustainable situation. What we have realised is that we are existing in a world which is full of data. And we used the phrase which was quote unquote in the future. In the future, will there be more data or less? Well, we all agree I think there's going to be more. Is it going to be more varied or less varied? Well, it'll be more varied as well. And then is it going to come faster, or so it's going to come faster? Is it going to be more accurate or less accurate? Well, it'll probably be more accurate. And then you come up with the question that was, do you think that you're going to need to use more of it or less of it? And do you really need more of it sooner? And that's where the gnarly issues sort of come up against. So we are in a situation, where, and everybody knows this, there's more data, not less, it's more varied, etc. And so when we look into our customers, we have a situation where they want to make money, and we believe the way for them to make more money is to be able to use this data. And when we look at the insurers, I'm not sure they have necessarily the infrastructure to be able to take on that data. If they have the infrastructure to take it on, they may not have the tools to understand that data, because this data is time series data. It's quite complex. It's difficult to manipulate. And if they have the data, the infrastructure and the tools, do they have the skills to be able to manipulate that? And if they have the skills to manipulate it, can they then use that information in applications which actually bring it to the fore? So can they make it relevant and have it available at that point? So we're solving that problem is, let's bring the world's data to life and actually turn that into decisions which ultimately turn into products and profits for the insurers and their clients.
And the first area you've taken on, or you built the products for, is in marine, which traditionally has been one of the areas where it's been hard to get data. The mariners or the underwriters tend to be quite old-fashioned. Did you just decide to go and tackle the hardest problem first of all, or actually was it the reverse, where you saw there was a real opportunity out there to make a difference?
I get asked this question a lot, which is, how did you end up in marine? When we looked into the insurance market, we came from a background of telematics. And the challenge with telematics, or the opportunity with telematics, it's all about disaggregation of risk. But then you end up with this sort of bit of a catch-22 situation is, in order to disaggregate the risk, I need data. In order to get the data, I need to install a box in the vehicle. And in order to install the box in the vehicle, I need to be on risk. So I'm like, well, hang on a moment. So I need to be on risk to be able to decide whether I want to be on risk. So that seems a little ironic. So we spent some time, this is back in 2015, 2016, going, is there a market where all of this data already exists, that we could get our hands on it, and we could use that to create behavioural profiles? And when we looked into the market, we saw that the marine market was out there, and we're based here in London. And we thought, well, we like the marine market. It's a global market. All this data exists. I can access the market from London. There's nobody else doing this. So we just did what a good startup should do, is we did a pivot and we went and stuck a flag right in the middle of the marine market and said, we're here to help. And that's how we ended up in that marine space. And strangely enough, we then spent many years just trying to immerse ourselves in that market and understand how the market worked. And I think one of the lessons that I've learned from that is, and actually I've probably conveyed this to anybody starting a company, is immerse yourself in your customer's business. Don't immerse yourself in your own business. Because if you understand how, in this case, how marine insurance works, then I think you can start to add value to it. And that's probably the biggest thing that we did. Rather than having data, we really took time out to understand how the market worked.
And I've clearly been successful because, as I mentioned earlier, you've started to sign up some pretty significant companies. And part of that, I believe, has been that you get to the decision makers in these organizations, and that can be hard often for people in an early stage company. So what sort of techniques have you used to be able to get in front of the people that really do control the budget and drive decisions, particularly, again, in this quite traditional industry where perhaps they're not actually looking for some new technology?
That's a really good question, actually. There's a word in your question which I'm not sure about, what techniques. It sounds like we're trying to, if I call them on a Thursday, or send them a cake or give them a book or whatever, that would be a great technique. But actually, I think the biggest technique is to be relevant. So you think about it in your own life. If someone comes to see you, then if they can add value to the conversation and actually help you extend the way that you think, I think that's good. So we went out of our way to publish articles, to publish blogs, to speak at events, to show that actually we're trying to think through how the industry could change and how value could be added. So when we go to see a customer, we usually go with a theory of their business. So we've seen your business in the market. We understand that this is the areas that you're trying to go into. We believe that actually if you could do this or you could do that, that might actually help your organisation. So typically if I go into a chief exec, I would have already spent time with other members in their team. So I understand their business a little bit. So the conversation is useful rather than going along and saying, hey, listen, we've got these features and these functions. That's not usually something that one of the senior execs is going to be interested in.
Yeah, although I suspect you're being slightly modest, or maybe you're just not prepared to share your techniques, because just that very comment about getting in front of the chief executive is something not everyone can do. And actually, funny enough, you mentioned about cakes. I know one of our regular listeners actually has won some business by sending them some cakes. So sometimes it does work. But you've certainly been able to get in front of some excellent people.
Well, actually, let me give you two things. So to be clear, we do absolutely have a cake-based strategy. Yeah. So if you sign up with Concirrus as a customer, we send you a dozen or so Concirrus branded cupcakes as an incentive. So big fan of cake, especially being here in Borough Market. If there were a technique, it's remarkably simple, which is I contact the chief exec directly and ask if I can have 15 minutes of their time to run some ideas by them and ask them some questions. I don't think it's actually any more complicated than that. But we never go into a senior exec's office I never go in with the goal of selling something. I just go into the goal of trying to understand.
Yeah, and within that is, I think, the really important part. You position it as you want to ask them some questions as opposed to you want to come in there and sell something. And that's certainly my advice to people is if you're trying to get into a market, don't try and sell too soon. And your point about you immerse yourself in this space is actually use the opportunity to do the research. And if as part of that research, someone turns around and goes, I want to buy this, then they're coming to you as opposed to you selling to them.
Absolutely, yeah. I mean, our number one value of our company is trying to add value to our customers. So if you go into the conversation, so how do I add value, then I think that the conversation becomes a lot easier.
And clearly it's working because there's some of the companies you've listed publicly, Willis Re, Marsh, Hiscox, Chaucer, Skuld, all well-known names, not just in marine, but more broadly. And also they've got a lot of people knocking on their door. So just like to talk a little bit about the product. So Quest is your main product. How does that fit into the workflow of the users?
So it changes the workflow in some respects. So if you think of, we tend to think of value chains, rightly or wrongly. I'm not sure that our customers necessarily think of them as value chains, but we think of a value chain. So in an insurer, one of the value chains that you have is the actuarial team is one part of it. Then you have the underwriters. Then you have the claims teams. You might have exposure management, etc. But actually, we've mapped it out with a few others. So we have the actuaries, the underwriters, something we would call pre-claim, first notification of loss, and claims managers. So what we're trying to do is actually join these people up rather than keep them in silos. One of the questions I used to ask a lot was if I go into an organisation and say, if you started to see a set of claims coming in for a given vessel, type of vessel from a given port, how long would it take for that information to get from your claims team through your actuarial process and into your underwriting? And the answer we usually got was, I don't know, maybe 2 years, but probably never. which I likened to, it's almost like trying to fill a bath, but putting one person in charge of the taps and one person in charge of the plug, and neither of them talking to each other, and wondering why it's either overflowing or never filling up. So our workflow is about joining that up. And as soon as we've been able to explain that to our customers and show this is how we're joining it up and this is what the benefit of it is, people are reasonably keen to adopt it. Your comment about the marine industry not necessarily having the most contemporary technology is very well put. So some of the value that we add is just a very contemporary technology framework. And so we're picking up the benefits of some good old-fashioned IT and then plugging in some of the machine learning and AI elements into that.
I want to come back to old-fashioned IT in a minute, but just keeping going with the way Quest sits in the workflows. So you tap into some data from the shipping, some of the AIS data, which is publicly available. That's used to help characterize the risk, and as part of the underwriting process is also the portfolio management. Is that a sort of fair summary of the
Yeah,
Quest?
so we have quite an extraordinary data asset now. So we have more than 500 billion records of data in our platform with something like 2 trillion data points. So we've ingested more than 20 different data sets about the marine industry. So everything from every vessel, where it was built, when it was built, what are the characteristics of that vessel, who's owned it, when, for how long, who's been managing it, who's been maintaining it. And then we combine it with movement data. So the AIS that you talk about is effectively a black box on the vessels that's put out as part of the International Maritime Organization. So maritime law says you need to be able to transmit where you are every 15 minutes from a vessel safety perspective, so you can see what's around you to avoid collisions. So we've repurposed that data and said, actually, if I can see where you are every 15 minutes, then I can effectively use that as tracking data. So we've turned those billions of records of data into proprietary data. So we now have created features, so from the obvious to the obtuse. So the obvious things are, well, where is the vessel? How far has it travelled? What's been its average speed? To then obtuse factors like standard deviation from normal sailing paths, etc., and navigation channels. And then we take that and we do a second form of manipulation on the data, which is where we combine that data with customers' data. So much in the way that Google understands the relationship between websites that it's spidered, the data that you type in for a search, and the results that you get. We understand the relationship between behaviors, whether it be ownership or movement behaviors, policies that you write, and claims that you have. So that intersection of behaviors, exposures, and claims is the data that we really understand. And that allows our customers to look at some a new piece of business that's been offered to them. So if you're sat in the box at Lloyd's or in the company's market, if someone that presents that with a new piece of business, we can give them a price for that business and explain why that price exists and what it would mean to their portfolio. And we do that in less than 5 seconds, whereas it might take an underwriter 1 hour, 24 hours, a week to do that process in their traditional environment. We do that in sub 5 seconds, get them to a price and explain why that price is the price and what it would mean if they signed that business.
Okay, very interesting. And AIS stands for?
Automatic Identification System.
Great, thanks. Now, I heard recently in the motor world, or just in the more conventional car insurance world, that one of the questions that's asked people is, do you keep your car in a garage? And actually, if someone replies yes, it actually is taken as a negative, because the reality is today, certainly in the UK, no one keeps their car in a garage. So anybody that's answering yes to that either is probably lying. It's sort of counterintuitive. Is there any data you see coming out of the information you're tracking, you're getting access to, that is actually counterintuitive in the way you might use it to measure risks for ships?
Absolutely. So some of the without getting into specific details, some of the measures that the industry has been using for a long time in terms of how it allocates risk and how it allocates reinsurance costs, etc., we've proved is not actually tracking to claims. So it's in some respects exactly as you said, it's the inverse of what the industry's been using. We're starting to see that behavioural factors are emerging that actually show that the way the industry's been operating isn't 100% correct. In truth, though, for a given vessel or a given fleet, it's actually an amalgam of the traditional factors and the and the new behavioural factors. So I'll give you a simple example. If you look at total losses, one of the things that's known is that the younger the vessel, the less likely is of a total loss. But if you have 100 sort of young vessels of an equal age, then age can't play a factor. If you take age out, then it starts to be behavioural factors, which has been unknown to date.
Good. And then talking about data, you alluded to this earlier on, and you've reported publicly a few partnerships. To what extent do you rely on third-party data providers out there to complement things like AIS or your own analytics, or indeed your clients' data?
So we don't originate any data ourselves. So all of our data, all our information starts off with us procuring third-party data sets. We have about 20 different data sets. That's growing dramatically. We have about 100 new data sets that we're currently evaluating. And it's a case of bringing those things together.
And so for anybody out there who may have a data set that might be of interest to you, are there examples of some of the challenges you've had or the data sets you'd love to get your hands on if only they were available?
Yeah, so the challenge we have is actually proving that they have relevance and they're not a proxy for something else. So again, we test all of the data that we come in to see actually does it give us additional insight in terms of improving loss ratios or understanding the predictability of claims, etc. So that is a challenge. I think that some of the data sets that we're interested in, they fall on two axes. One is that AIS is great as a set of data. Unfortunately, it can be manipulated by the fleets. They can switch their transponder on, or they can switch it off. They can change their IMO. So when we have ways of detecting that and cleaning that. But actually, if you had more frequent data, that might be valuable. So higher resolution data could be interesting. And then we're starting to see the emergence of more information around cargo. So sensors in the cargo for the condition of the cargo, etc. So as the cost of the devices comes down and communications becomes ubiquitous and free, there's going to be more data and more detailed data about the nature of the cargo itself. And that's, again, more interesting. We're starting to see more of that being used in the applications.
Yeah, certainly cargoes has always been one of the challenging areas of risk to understand, just given all the movement around the world and the aggregation. So just talking around the world, so you've mainly been selling into UK. You've got, I think, a couple of clients in Europe. We've actually got 50% of our listeners who are outside of the UK, quite a few in the US. Have you got a solution that's sort of outside of the UK or for companies operating outside of the UK that you can sell to them?
Yeah, so absolutely we have. So every one of our customers today, I'm trying to think, almost without exception, uses our product on an international basis. So whilst their companies are often domiciled here, many of them aren't. We see our product being used internationally already today. So it copes today with multiple currencies. It copes with time zones. It copes with language. All of those things are available within the application today. As part of our Series B funding, we are looking to expand our geographic footprint of our organisation. So today we service all of our customers out of our UK office. You'll start to see us expand into North America, into Asia, into Europe over the next couple of years to give ourselves a more local presence.
Excellent. And are you also looking at expanding into the fleet owners and the ship owners themselves, or do you still primarily see your clients going to be the insurers and the brokers?
There's undoubtedly an opportunity to expand into the ship owners and fleet owners. One of the ways that we looked at the market was that in the way it's historically worked, risk transferred from one party to another. So someone like Maersk would transfer their risk through a broker to an insurer, through a broker, through a reinsurer, etc. And that worked. And we saw in there a declining level of data. So if you were to go to the reinsurers, the amount of detail that they had was a lot less than the insurer, which was in turn a lot less than the insured fleet. So we called this the declining data dependency. Because not only did it decline, you also got that data from the person in the chain. What we now see is that the data is available to everybody. So it's, we've got like a data democracy going on. So the likes of Maersk, and not picking on Maersk specifically, but as a shipper, they have as much data, probably more data than anyone else, but they have that data is available. Exact data now is available to the insurer, and that exact data is also available to the reinsurer. So we've actually seen that our view is that the market's going to change, in that rather than it being a linear process where one passes to the next, it's almost a network effect where everyone's centered around a common set of data. And that's going to change some of the roles. And so I think that brokers aren't just going to be there to transfer risk. There are risk advisors. So what should you keep more risk on your balance sheet? Should you create a captive? What should you cede into the market? Under which conditions? And then rather than having reinsurance brokers, more capital advisory. So where should you put this capital? And what return could you get out of it? And what would the product look like? And that very much fits to innovation as well, because we talk a lot about innovation. It tends to be the innovation in technology, but actually we need innovation in the insurance product itself. Because if everyone has the same data, we've seen people create automated war policies, but actually why can't you create a policy which flexes as your business flexes? So I could have a simple mileage-based hull policy if I wanted to, that had uplifts in payments for travelling more, but equally returns of premium if I lay off in port automatically. And all of that is possible once you have an accepted view of what the underlying behaviours are. So one of the areas that we've been successful in conveying to the market and actually got some good traction is actually if the brokers have the same data as the underwriters, have the same data as the reinsurance brokers who have the same data as the reinsurers, then actually that product innovation doesn't have to come from one end. It can come from anywhere in the market. An insurer could say, actually, I've been thinking about how to create a new product. They could create a product which push out through the brokerage channel. So much of the disruption we've seen in the market in insurtechs is actually people coming up with a new insurance product and disrupting that value chain. And I think that disruption will start to occur in many places, not just from small companies coming into the space, but actually that innovative, creating new products can come from anywhere, now with a common set of data.
And that's very much built into the history of Lloyd's. I was talking to John Kavanagh recently. He's the co-founder of Beat, but has been in the industry for 45 years. And he was pointing out that Lloyd's came up with the original policy for airlines, the original policy for motor. And so you sort of think of the challenges they had back then, and they solved them, and people now obviously underwrite those areas. I think the other thing that's worth pointing out, you sort of mentioned it in passing there, but it can be confusing, that word product. So anybody in the insurance world talks quite comfortably about the product, and the product is actually the insurance offering, not the product the way that a technologist might think of a product as a bit of software or something physical. But also the other point, you sort of, as you talk about that, is potentially one of the threat might be too strong a word, but people sort of look outside of the conventional insurance industry and get concerned maybe about Amazon coming in. But I think there is definitely something in there that as the end corporate clients start to understand their own data more, have got access to analytics, have got access to their own capacity and capital, then the industry needs to work with them to help them manage the risk, not just look to try and sell them insurance. And it sounds like you're part of that solution because your products can help both the insurers and the brokers, but also the end client as well. Could I just talk a bit about the team and the way you've developed and built the business? You've got so many excellent people here. I know some of them personally. You brought people in from data science, people in from the industry. Like yourself, when you moved from working in a sort of established company with a sort of relatively well-known business, it can be difficult for people coming in. I mean, you've now been around for a number of years, but what is it about what you do at Concirrus that people want to come and choose to work for you rather than go into a sort of more conventional organisation?
I think that one of the opportunities that people see with us, and we certainly convey this, is that there are very few times in your career where you have an opportunity to impact a global industry at scale. And we feel, and I personally feel very privileged to be in a situation where we're driving some change in this industry. And I think we're driving it for good. And that sort of persona, as it were, comes across. And there's in our organisation, if you go around, there's a palpable excitement about the value that we're adding. Yesterday at our fleet event, There was a stat that was put out that we've created a 5-fold improvement in the ability to detect crashes in motor fleets. We have put a pricing product out there, and we are able to see, with our customers are sharing, that how our pricing model is tracking to claims an order of magnitude better than the traditional ones. So that excitement about the fact that we are genuinely adding value sort of comes through the organisation. We're an insurtech. I've never been a particular fan of the phrase insurtech, but my belief is because I think that all insurance companies are insurtechs. They just may have the wrong tech. But it does. The label does fit because if you look at our company, if you look at the demographic, we have I think 82 people as of today. About 30 of those come from the insurance background. One of the surprising things in the last probably 6 to 12 months is that the number of applications that we get from people seeking an alternative career, so moving from an insurer with some technology to a technology company that understands insurance. And we look for a few things. We look for curiosity. Probably my biggest hiring characteristic is, does the person, are they genuinely interested in what we're trying to do, and what have they done in terms of research, etc. We look for energy. So the curious, and are they out there wanting to, for whatever reason, are they want to, if is their hair on fire and they're running around trying to make a change? We look for credibility. I want to be able to put people in front of our customers, in front of our board, in front of our investors, and I want them to be, credible. I want them to be someone that they go, these guys, ladies typically know what they're, absolutely know what they're doing, and they want a sense of humility. And that the last one is particularly tricky for me. Being humble it's not a natural characteristic for me. But actually, we want people who are, will be respectful of the industry, because this is an industry that has worked for 300 years. There are very few other industries that, whilst we say insurance hasn't changed for 300 years, it's like, yes, because it's worked for 300 years. Now we have a technology change, it needs to evolve, but actually recognising that, for me, insurance is an essential industry today, and not bashing it, everything that, it's an industry that's broken, it doesn't work, etc. There's a difference between doing that and trying to understand how it can be improved. So having that sort of respect and humility is a big characteristic for me that I look for.
Well, great. Well, thanks for sharing that. There's a lot in there. There's a couple of things I think that's worth mentioning. One is, having talked to some of your team here, it's been interesting seeing how they've been able to track people from insurance. You've actually got really good analytics backgrounds. So, and some of those have come from the underwriting world. If you've been doing this 10, 20 years ago, there were some, but there were much fewer people who actually had strong analytics coming from underwriting. So it's been interesting that you can bring them in both with domain expertise of insurance, but also they've got the raw skills you need. And the other one, but you mentioned as well about one of the things you look for in people, which I think is a really strong acid test when you're interviewing anybody and thinking about hiring them, is, yes, if you take them in to see a client or you take them in to see the person that's spending money with you, are you really proud of that person? And if you sort of look at somebody when you're not too sure if they're the right person, and you sort of say, well, would I be proud of taking them in to see somebody else? And you don't really feel proud about them, it's normally a signal that they're not the right person.
No, I agree wholeheartedly. Yeah, and actually, it's interesting. The insurance industry is known for perhaps not being the youngest industry, so it's our target customers. But we have, I think, 60% of our company is under 35. And one of the things that, again, I'm most proud of is actually we are training that next generation of insurance professional. So whilst we're not an insurer, I strongly believe that the next generation will be a hybrid of insurance and technology. They'll be digital natives, and they need to understand both. And I think that some of our, by the time hopefully I'm long retired, I think that some of the team are going to go on to have quite spectacular careers in the industry.
Long retired and enjoying that lifestyle that you thought you might be getting.
That I deceived myself that I was going to get.
Good. Well, now I want to come back on something you also mentioned about, as a lovely phrase about everything's insurtech, but not everything's the right tech. I think that helps us all kind of like get away from like this discussion or debate around what is insurtech and what isn't. But one of the things I'd be interested to get your views on is, there is a lot of concern, and to some extent rightly so, about the legacy that the existing insurance organisations have to work with? And to the extent, does that actually hinder progress? Does it hinder innovation? It's a big issue for Lloyd's just now. So I'd be kind of interested in your view as you look out there, not just from what you see at Concirrus, but more broadly. Do you think that the insurance industry continue to move at the speed it needs to and innovate and still work out how to live with this legacy technology that's going to take years to move? Or do you think really the only way forward is to actually have to have a clean slate and actually move away in a sort of very significant way from that legacy technology?
It's a good question. It's a very long discussion, I'm sure. So I think that there is no doubt that the industry needs to refresh its technology platform. And they need to change some of the processes, which are redundant. Everyone's heard stories of people photocopying iPads and faxing it off to people, etc. And that intuitively doesn't make any sense. So there are undoubtedly pockets of that. One of your questions, I think you were talking earlier, was about favourite books. And there's a book out there called The Innovators Dilemma. Many people know about this book that talks about how technology changes business models. And I think that there's no doubt that an external company coming in with a clean slate of technology that's able to build a new business in the insurance market, may or may not be in the scalpel, who got experience of the insurance industry but is just doing a ground-up technology build, will absolutely have a systemic advantage. And how the market reinvents itself, I'm not 100% sure, because there are some legacy systems. And if you humanise the problem, because it's easy to talk about companies, but the reality is that these companies are run by people, and none of these people are fools. They understand this. But I think that part of the challenge with modernisation is you're asking the executives in this organisation to make an investment that will help their successors get their bonuses. And that's a really difficult ask for any individual. I'm confident you could call any chief exec of any insurer and say, do you think that you need to modernise your infrastructure? And they'd go, yes. Yeah. Are you committed to do it? Absolutely. Can you afford it? Well, I can afford it, but it's going to hit my income. So I actually think it's not an executive issue, it's a non-executive issue. And arguably, it's even a shareholder issue that says, we need to make an investment that might take us 5, 10, 15 years to actually pull through. But it's as I started, this is about, are you going to exist? Because undoubtedly, if you exist, the expense ratio in Lloyd's cannot remain, the cost of acquisition in Lloyd's cannot remain in the mid-40s. The expense ratios of these organisations need to come down from wherever they are, 20% to 15 to 10, whichever. Otherwise, the industry will survive, but the players are going to change.
Yeah, no, I feel we have a much longer debate on that, and certainly some of the Japanese historically have been able to do better with that long-term view on investment. Well, good. So just before we wrap up, you've touched on your books, and actually interestingly, you're the second person that's mentioned The Innovators Dilemma, so I need now to go and read that. But one of the questions I think is always fascinating from people in your position is you've got so much going on. Fundraising itself is a full-time job. You've got to hire a lot of people. How do you balance all the commitments on your time, still have time for your family, and still stay sane?
For me, routines is a big part of my day. So I'm a prolific reader. I probably read anywhere between 2 to 4 books a week, whether they be paperback or audio books. I commute in from Hampshire each day, and I use my time on the train. And I schedule time. I come into Waterloo Station and I walk from Waterloo to the office, and I schedule calls for my walk. I schedule specific activities for my train journey on the way home. And I try to make sure that when I'm home, I'm home. I'm very committed to my work. I'm very committed to my family as well. Yeah. And actually that goes through the company. So we have a policy. We don't want people to work evenings and weekends. So when you're not working, you should be not working. Occasionally we might breach that policy because we have customer deadlines and commitments. But for me, the thing that I've found to make that work is to try and make as many deliberate decisions as possible and not leave it to chance. There's no magic answer, is there? You just have to try and maximise your time.
No, well, thanks for sharing for that, because it's showing that I think is one of the biggest challenges people do have as they start to scale. And I think a lot of companies struggle for the founder when they get to sort of start to scale up to be able to manage to do that. Well, Andy, I've asked you a lot of questions, but before we wrap up, is there anything else that you would like to talk about or share that we haven't covered?
No, I think that just to reiterate the point that I made earlier about I feel very privileged to be in this position. For the first 18 years of my life, I was told that being disruptive was a problem. It now turns out that that's a talent. So anyone else who shares that talent out there, I would encourage them to follow it through. I think that one of the big lessons that I've learned is that actually, if you can apply yourself with intelligence and diligence and genuine desire to want to add value, I think that you can achieve a lot. The same's true of your own organisation with Instech London. I go along to the events, and I remember some of the early events where there were a dozen people milling around trying to work out what they were going to do. Now you're having to successfully go to bigger and bigger venues, and especially as we're in insurance. Insurance is a multi-century-old industry. So if you expect it to change overnight, you're going to be wrong. But I think that again, applying something with diligence and a belief and listening to the people that should listen to and ignoring the people that you shouldn't. I don't know how you tell the difference between those, by the way. But I think you can achieve lots. So I think if anyone's out there not wanting a lifestyle business, I would encourage them to go for it.
Good. Well, Andy, that's tremendous. And thank you, yes, for your support for Instech London, both for turning up, for allowing your people to speak on stage. You've got Chris Gill coming up in March for our motor event, and for you there as well. It's been tremendous. I mean, a lot of people, as I mentioned earlier, look at what you've been doing and learn a lot from it, and frankly get inspired. You've tackled a really difficult problem. You've showed you can get clients, and actually the other thing that you've also showed is you can get clients that are willing to be mentioned, which is often a problem. A lot of companies at early stage sign up clients, but actually the clients are a bit nervous about the future of the company. And I think it's a great statement that when your clients are actually willing to have their names put out there. So so many fronts, well done, and really look forward to seeing how things develop from here on.
Oh, well, thank you. Watch this space. We have a couple more client announcements coming out, which will be surprising for everybody, I think.
Excellent. Thank you. If you're enjoying the podcast, then please do help us by spreading the word. You can find each episode on the website along with our write-up of the event. We'd love your comments. Check out my post each week at my LinkedIn page, Matthew Grant, and do add your thoughts there. And finally, let us know who you'd like to hear from on our podcast. We're casting the net fairly wide, so geography and industry is not a barrier. All we want are people with great stories and maybe those that might want to sign up as corporate members. That's it for this week.